Today I'm here to deliver you from losing your money. Hi, welcome to GITIXONE trading channel. I needed to do this video because I have seen quite a lot of people who have been taught this strategy, and I want to demystify this strategy. It doesn't work. You are going to lose all of your money trading like this. What is the strategy? The strategy involves that you will impute an indicator on your chart, something like the RSI for an example. This one is so common, RSI 14, and then people insert it with all of these levels. These levels here, this 20 and 10 level, are known as the oversold region, while the 80 and 90 levels are known as the overbought regions. So the idea is that for you to catch the spikes, immediately the RSI indicator comes into the oversold, which is the level 20 or level 10, that the candle is going to spike, just as in this case. I hope you can see. Let me show to you. All right, can you see this? Can you see this red line? All right, the idea is when the RSI indicator is moving down like this, when it gets to this 20 level, it should spike. So that means you will enter a buy position at this level. Let me draw it here. Okay, so let me use another red line. Sorry. Let me use a red line. All right, okay, let me make it bigger. All right, so the idea is this particular area where this red line crosses the blue line. Let me change it to green so that you can also understand. Let me change the color to green. All right, so the idea is this particular place where the red and the green crosses, this is where you enter the buy position, simply because the RSI just crossed the 20 level in the RSI indicator. So the expectation is that there will be a spike. You understand? The most important thing about this RSI indicator is that it doesn't repaint. You understand? So, but does this work all the time? Because this is a perfect scenario where you enter the market here and immediately you enter 3 candles later, there was a huge spike. So that is in your favor, right? But does this work every time? Now let's continue to analyze. Now let's go on. Now you see that the RSI got to this particular level here, and there was a spike again. You understand? There was a spike again, but very, very little. All right. So you would have entered the market here, then the spike will take place, and you'll be in profit small. But then what happened? It kept going down. Kept going down. All right. So even though the market had already gotten to the 20% level again in this place, it has already gotten to it again, but yet there was no spike. Look at the number of candles that moved on before the spike, and if there was a spike here, your profit is also going to just be this particular area. Okay, so that means you would have been risking more than you made up here for the spike. Okay, you understand what I just did? All right, so let me go on again. Let me show you other ones. Let's keep moving on. So then look at this other side. The market got to the 20% line here, the 20 level, and what happened? It did not spike. It moved all the way down to this level. Okay, so if you are the kind of person that were using very big lot size to catch the spikes, you would have lost all of this money waiting for the spike. The spike that never took place, the spike that did not take place because of the RSI. No, they remind you, this will not happen because your RSI touched the line. That's not why it will spike. Okay, so now let's keep going on. This is another point where it touches the 20% line. Okay, so here is spike. I will explain to you the reason why this thing spike at this level when I want to show you how to actually trade boom, 500 and crash 500 because the strategy is the same. Okay, so here it spike and there is a lot of spikes after this. I will tell you why. I'll tell you why this one failed here. I'll tell you why this one worked here, because what you need is knowledge. It's not an indicator you need. Okay, so let's keep going. Let's keep going. Let's keep going. I want to, okay, let me just forget about that particular red line. All right, so now look at another place here. This was another place here. Here the market touched the 20 line. Now imagine how many candles, how many movement took place before the spike occurred here. So that's to tell you, it doesn't spike at the 20 level. How many of the 20 level would you have lost before you will catch one? That is gambling. That is not trading. Okay, so let me continue. All right, so this is another one. This is another one. Look at it here. This is where it crossed the 20 line, and then you enter here. Let's assume you enter here. Okay, so this is where you would have entered. Look at the profit, smaller than the loss, than the risk. That's not how to trade. You understand? That's not how to trade. Okay, then now let's go again. We're looking at all the scenarios where it touched that 20 level. The same thing again, small profit, market kept going back again against you. All right, but then in this scenario it worked. In this scenario it worked. Maybe you have seen this strategy, maybe you have not seen it before, but when I started trading 2020, this was the strategy I was using to trade. It will give you money, a hell of money, but all at once, that same money you made, that same day, you are going to lose it. Because let me explain to you the reason. Number one, you are trading on the 1 minute time frame. That means you are going to see this happen more than 100 times in a day. You don't know which of the 100 times, you don't know which one of them is going to work. That means you have to keep entering until you get the right one. So there's no way of knowing the one that is going to spike. All you just do is believe that every time it gets to that 20 level, it will spike, which does not happen every time, because like I've shown you, you will see scenarios where it will touch that 20 level and it will keep going down. There will be no spike. You understand me? Look at this one again. Are you seeing this? This is where you will have entered, this level here. Are you seeing this level here? Let me draw the green line so that you can see it. This level here. This is where you would have entered. Okay? And the market kept going down. Imagine you are using a very big loss side like I was using then. Your whole account would have been wiped out before the spike occurred. You understand me? So you don't just buy because the thing touched the 20 level. All right, I can go on and on showing you this, that it actually works, but you will lose your account when you trade like this. Why? You are guessing. You are going to have more than 100 positions in a day, and I'm telling you that yes, there were times when I started trading, I will enter close to 100 trades in one day, just to make sure I enter. I take profit, and at the end of the day, all the profits you've taken, all of that, you give them back to the market that same day. In fact, your account will end up in the red. Do you understand me? So imagine this one again. Are you seeing this? The market got to the 20 level here, and then you're supposed to enter the buy here. Now imagine you would have lost all of this before the spike, because when you trade on a 1 minute time frame, you trade with big loss size. You trade with big loss size. All right. So imagine this one again. Imagine this. This is where it crossed the 20 line. All right. Look at where you would have entered the trade. This is where you would have entered. What happened? Market kept going down, and when it finally spiked, it didn't even get to where you entered. You understand what I mean? So you can actually see this happening throughout the day, right? You'll be here, you will trade more than 100 positions in one day, and all of those positions you are going to get that will go well in your direction, you will lose all of them back to the market that same day. So it doesn't work. And I know some of you that say, let me just try it once. If it work, then I will go. I'll come again and try another day. The second day you will come, you will lose that money. That's just the way it is. So you will lose all of your money if you trade like this. All right. So how are you supposed to trade? How are you supposed to imagine I enter this particular buy here now? Look at this whole spike, but I would have lost all of this. How many of you have the money to hold this kind of trade? And you know, you'll be losing over $1,000 just to cash how many dollars? So at the end of the day, you discover that you don't really have a good way of trading if you are trading like this with an indicator. So how are you supposed to trade? How are you supposed to trade? All right, so let me remove this indicator and show you how you are supposed to trade. All right, so this is the same boom and crash, and this is a 15 minutes time frame. No trader is supposed to be trading on the 1 minute time frame if you understand what it means to actually stake your money and wait for an appropriate return over your money. Okay, so those that trade on the 1 minute time frame, well, I don't know how they are doing it, but frankly, it is not the kind of time frame you want to trade. You understand me? So this is the 15 minutes time frame. If you want to go lower than this, let it be the 5 minutes time frame. But what I'm about to show to you, it works in the 5 minutes, it works in all the time frames, but it is easier and clearer on the 15 minutes, and it will reduce the number of trades you take per day. You understand what I mean? So before I even show you what it is, let me just show you the whiteboard and explain the strategy to you. Alright, so this is the whiteboard. So what I'm about to show to you is something I've talked about severally in this channel, and I want to talk about it again. So you are trading boom 500. Now you want to buy because you want to catch the spikes. Okay, so what you are supposed to do is to wait for the market to be in a trending, in an uptrending circumstance. All right, so the market would have been trending up in this manner. Okay, you know that when the market trends up, it breaks a high and it comes back to it. Okay, so then let's say the market has started going down, started creating structure of a downtrend in this manner. So what you wait for is for the market to break a particular high like this. Let it break it upwards. So what you are expecting is a return to this particular level, then you buy. Do you understand me? So this thing I just mentioned now is very important. Now, what are you going to do? You're going to put your entry here, and then you're going to put your stop loss here, below this level here. Okay? So that is one way of cashing the spikes. I'll show you another way of cashing the spikes. Another way of cashing the spikes is as the market keeps going up in this manner, okay, you wait for it to come back to a previous level that it has broken. Then this is where you buy. This is another way to do it. Then I'll show you another way to do it. The market would have been going up in this manner also, as you always. Then you allow it to come back to this level. This is what I call equal lows, right? So it's equal lows, we call this one a liquidity level. Okay, this is where you buy from. You buy from this level. These are many ways. These are the three ways to do it. All right. So in this first scenario here, you can decide to put your entry here, and your stop loss will be below a particular bullish, particular bearish engulfing. Okay. So, but I prefer this one. This is the one I used to trade. You understand me? This is the one I used to trade. This first one here, because I cater for the whole of this area as my stop loss. All right, let me go and show it to you on the chart. All right, so this is a live chart. Now this can happen for a buy and a sell. With this strategy, you can sell and buy. You understand me? So, but I'm just teaching you how to catch the spikes today, and it works on any time frame. So let me go to the end of this particular asset. Okay, so this is the end. So let me start showing you from this place. Good, this is one of them. This market was coming all the way up, was coming all the way down rather, from this level, was coming all the way down. Are you seeing it? Look at my lines over here. Then it started going up, came down again, and started moving like this. Now I've seen an entry. I don't know whether you are seeing it. Let me clear. So this is the entry. This is entry one. This is a place where you buy. This is where you buy. Your stop loss go below this level because the market broke a high here. All right. So let's assume you don't know how to see that kind of a thing, and your eyes are not used to seeing it yet. This is another one. This is second place you enter. Are you seeing this? And your stop loss go below this. you continue to buy upwards. This is 15 minutes time frame. This is a lot of money. Do you understand what I just said? So this is how, with this, you will not have too many entries in a day. You only have one. Sometimes in a whole day, you will not have any entry at all. That's how to trade. When you are a good trader, trading becomes boring. You wait for a long time for you to see what you are looking for. That's how you know you have started trading. If you are still trading up to 20 times in a day, you are not a trader. Because the strategy you are using before, that RSI, will make you trade more than 50 times in a day. You understand me? So if you are still trading up to 20 times in a day, you are not a trader, you are a gambler. You are looking for what you can use to make money. So a good trader does not take maximum 5. That's because you trade maybe like you are in the 15 minutes time frame or on the 5 minutes time frame, and you trade more than one asset. Ideally 1 or 2 at most. That's what you should be doing as a trader. When you become a trader, a good trader, you are not going to have your setup every day. You are not going to trade every day. Even if you see your setup, you will know the conditions where it works. So in that scenario, when you see the setup, you'll be like, oh, in this condition, these setups will fail. So that way you don't trade. You understand? That's why you know you've mastered your art of trading. Okay, so let me clean this and keep showing you how to use the strategy to trade. So now I just shown you that here would have been an entry for a buy. Okay, then here is another entry for a buy. Why is this so? Because the market is going up. So when it breaks a high and it returns back to it, you enter on the return. That's what I call the pullback strategy or the break and return strategy. Okay, it works. All right, so let's keep going backwards. I told you can use this for both a sell and a buy. All right, you can use this for both a sell and a buy. Imagine you are selling, you'll be selling from here. You understand what I mean? You'll be selling from here, and you'll catch all this move downward. All right, so that's how to trade. Okay, so let me remove this line and show you another scenario. It's everywhere. Okay, it's everywhere. Are you seeing this? It's everywhere. The moment the market breaks a high in this manner and goes up, allow it to return back to it, then you buy. You make all of this money. All right, it happens every day, every time. Just follow the trend. If you are buying, you are selling, you are going to make money. All right, so it's the same thing here again. I hope you can see it. All right, look at it here. The market was coming down all like this, then created this movement here. This is a break, so you wait for the retest. So here becomes the place where you enter a trade on a buy. You enter the trade on a buy here. You will have caught all of this move upwards. So that is what it means to be a trader. Okay, so if you miss the entry at this level here, then look at another entry again. This is another entry for you. Are you seeing this? This is another entry. If you miss that one, there's another entry for you. Yeah, the moment it starts going above 3, I don't trade again because it's already close to a top. This is a top here. It's already close to this top. All right, so when you start getting close to the top, you stop using the strategy, because if you are using the strategy to trade, you must know all the scenarios where it will work and where it will fail. So you don't just enter the market believing that it will spike and then you just begin to hope, and then before you look, your whole account is gone. Don't trade with an indicator. Do you understand what I mean? So the strategy works every time that you find it in the direction of the trend you want to trade. Like in the direction of the trend the market is going. This is an entry, it didn't get back to it. So what happens? You wait for the next one. There's another entry. Here you enter the trade and you hold it for all this long. That is how you trade. That's how you catch the spikes. Look at another one here. Okay, the market bought from here. Are you seeing that? Are you seeing that? So that is how you trade the spikes. Okay, so don't go and carry your RSI indicator and you put it on your chart and you want to be cashing spikes. You want to use $1 to make $200. That is not realistic. You understand what I mean? It's not realistic. Nobody does 200%. Sorry, that's almost 200,000% or 20,000%. Yeah, nobody does that. Okay, you cannot put $10 on a trade and you want to make $500 from 10 at once in less than 2 minutes because you're waiting for a spike. You are a gambler. Okay, so the right thing to do So study the structure of the market. When the market breaks the structure, allow it to return back to it, and then right there you can have good setups to trade. Do you understand me? So these are very, very good setups, okay? According to the strategy I'm showing you, are very, very good areas where you can enter a trade. You understand? Well, areas where you can enter trade. This is level 1, this is level 2. So the market respect levels. Okay. All right. So thank you so much for watching. If you like this video, please give it a thumbs up. And until we meet again, happy trading.